Hello, dear traders. Welcome to our webinar. My name is Thomas, and I'm very happy to welcome all of you here in our webinar. If you can hear me, so please write something in the chat, or maybe you can even press the like button already. I don't know. It's up to you. Even before we start. So today we're gonna be going diving. This is a trading strategy, one of my favorite as well. It is definitely among my top 5 trading strategies that are available on the Olymptrade platform. And today I will try to demonstrate to you how one can trade using this strategy, how one can find areas or setups or pretty much levels of support where you can actually get some advantage over the market. So all right, so Mayank, hello, nice to see you here, welcome. And well, I think I don't want to beat around the bush, so I'd rather jump straight into trading. And so I need to click this button, so these with the strategies. Then I click with indicate technical analysis. Let's call this button technical analysis. So first we click here, so technical analysis. Next we click strategies, trading strategies, and we need to scroll down and find this strategy called diving, which is available for the advanced and expert statuses of our platform. Hello, Rohan. Hello, Fayut. So welcome, guys. So, like all our trading strategies, diving strategy is fairly simple to use, and it requires a little bit of practice. Well, I wouldn't say it requires a little bit of try. It requires a little bit of practice to understand how it works. But then, if you want to polish all the nuances, if you want to really see whether this strategy fits you or not, whether you want to add it to your trading arsenal or not, or you want to leave it out, basically you need to open at least 50 trades using this strategy. So 50 trades at least, just to understand whether this strategy is for you or not. So the main principle, the working principle of the strategy is simple. Well, first of all, so we can, as you can see, we have 3 indicators in this strategy. So indicator number 1, the simple moving average with the period of 20. So let's call it the 20 SMA. Next, we have the 7 ROC, the 7 rate of change. So 7 means its period. And then we have the slow one, the ROC, but a slow one. So we have the fast one and the slow one in this strategy. So the period of 7 and the period of 14. So as you can guess, the setup in this strategy is fairly simple. So first we need to have the price has got to be above the 20 SMA. Next, the 7 ROC has to be above the midline. So we have this 0 line and the price has to be above it. And finally, we have the 14 ROC. Basically when we are trading above, that's pretty much it. So that's an up signal with this strategy. So guys, let me go ahead and open my first trade here for you. So gold, my first trade is on gold. As you can see, we are right now currently trading above the 20 SMA, so well above. And next, the fast ROC and the slow ROC, they both indicate bullish sentiment, so upwards sentiment on this chart. So guys, some of you might ask, so I don't have this Astro index available on my platform. Yes, some of the features of the platform are not available in all, I would say, like in all parts of the world, and we have some local assets. And since I trade on my working account and I'm an employee, we get access to some features of the platform, like, let's call it early access. There is a number of interesting tournaments and events coming up this year, and I think this summer. Yeah, well, when it comes to Quickler, Quickler, yeah, you can trade Quickler, and maybe in the end of this webinar, we might as well open a few trades with Quickler. So my next trade was on commodity composite index. I think it should be available for everyone, for all our traders. And so once again, the setup was this. So the 7 ROC above the midline, the slow one is also above the midline, and the candlestick, the price was above the midline at the moment of opening this trade. So that gives me the right to open a trade in the upwards direction. And we can go ahead and try the GBP USD. So let's do something else instead of, oh yeah, actually we have one trade, one up, one down, one up, one down. Okay, so two trades up, two trades down. So yeah, the signal here is, so once again, is very clear. We have this, the 20 SMA is above the price. So it kind of pushes the price to go down, like it's a bearish sentiment, so to say. And the 7 ROC and together with the 14 ROC, they are both under the midline. So that's that's all we need in order to open a trade. All right, so beautiful trade here, closing on gold. Now, so some nuances come into play. All right, so usually I don't open trades, I don't open up trades on the continuation like this. I usually wait for a pullback, and I try to open trades on pullbacks. That's kind of my strategy. Some people, they just don't care about it, and they just open trades whenever. Okay, and let's open another one on Astro Index, another trade downwards. Oops, so this one is looks like a breakdown. So it looked like a nice trend, like a nice up trade, but just turns out that the price just started going south, and well, eventually there is no signal right now. So what comes next? Oh, and that's a reversal as well. All right. Okay, guys, I will try to use some of the most popular assets. Okay, so GBP USD. Do I want to cancel this trade? I don't know. I mean, no, I'd rather keep it. I mean, I can get back like 25% of this trade, but it's just, well, I don't know. Yeah, you just sometimes have a pretty good chance because, yeah, even though we have 30 seconds left until the end of this trade, we are not that far from the opening price, so why I didn't cancel this trade, and I'm keeping it up until the end. But well, of course, now the chances are minimal. So what is next? All right, let's give it a try here. So the Australian dollar against the Canadian dollar. Once again, we have this price going upwards. We are above the 20 SMA, and so the 7 ROC and the 14 ROC, they both are signaling for up trade. So yeah, let's do it. So USD JPY falling down. Let's see. Well, yeah, seems like a good trade. what I want to do is I want to wait for a pullback. And here, well, I don't know. I think I want to keep it. I think, yeah, I don't want to cancel this trade. I think I have pretty good chances of winning here. So Astro Index, very technical. Well, I would say in general, all these. So whenever you see an index, like the word index at the end of the name of an asset, that is usually a good sign that so this asset is a well, so to say, a very technical one. It follows the rules of technical analysis quite well, very well, because most of the indices are based on some underlying assets, and not just on one asset, but on a, I would say, on a number, on a group of different assets, on a group of different underlying assets. And well, yeah, that's pretty much why that is why they are so technical. Yeah, simple as that. Right, let's give it a try here. So commodity composite index. So once again, the signal is here. So we are trading under the 20 SMA. Next, the fast ROC is under the midline, so it's area, and the 14 ROC, yes. So once again, we are under the midline. Oh, and we can try this. What is this? Munch index. Let's let's just try it. I think it's going down. So trend is here. The trend is there. So yeah, why not? I think today diving is not giving good result. Well, the truth is that market is such a liquid substance, and I mean, like, you can only well, I wouldn't really judge by like, I would just judge on the result, because I mean, like, we all want to see the future, and we all are trying to anticipate what will happen next, what will happen in the future. But unfortunately, before you make a trade, and before this trade completes, is finished, there is like almost no way to tell whether it's going to be a winning trade or a losing trade. So before I started my trading session, I cannot say that, okay, so this trading session is going to be a profitable one, or I'm going to lose some money. Unfortunately, it just doesn't work that way. So we just have to rely, well, basically you have to rely on some mathematical probability, or so what's it called, mathematical expectancy, I think, or something. I'm not sure about the English term, the English word for that, but it kind of tells us, well, basically, yeah, what we are trying to do here with trading. And let's open another trade in the amount of, so 5 minutes. So guys, what we are trying to do here is we are trying to gain a small statistical advantage. So I mean, like, if you wanna like flip a coin, you wanna toss a coin 50 times or like 100 times, it's going to be like probably your result, your trading result will be around 50-50. So 50% winning trades, 50% losing trades. Now, all you need to do is you need to like basically just move this probability just a little bit in your favor, just a little bit. So that's, I'm not even talking about like 70 to 30, 55 to 45, that's the bare minimum. Okay, so yeah, based on that, basically that's how you build a trading strategy. And I mean, like, it is all about ups and downs. So some days your strategy will work, some days they won't, and it's just this endless circle of trading. That's how I mean, like, I've been trading for like 10 years, and up until now, I just, whenever I see a signal, I just trade it. So basically, since I'm still in the game, that's a good sign that, or that's a that basically explains that most of the time, I mean, like, not most of the time, but more than half of my trades and combined with money management, I'm right. I'm on the right side of the market. And well, basically the only way to see whether this or that strategy works for you, or you just need to, yeah, like trade, make trades, open trades, figure out, like find some things that work, find and try to avoid some things that don't work, and some things that, well, basically take money out of your out of your trading pocket, out of your portfolio. So, and I mean, like, sometimes you just, well, I mean, like, it's just nearly impossible to predict whether, this or that trade is going to be a profitable one, whether this or that trading strategy is going to be, I mean, like, trading session, trading day is going to be a profitable one, or you will lose some money. It's all about working with uncertainty. It's like this. Well, this book is called The Black Swan, and by Nassim Taleb, and that's a great book because it teaches you like this mindset. I mean, like in this book, I don't know, I think most of you have heard of it, or I don't know. So Nassim Nicholas Taleb, like this guy who uh he was a trader. I think he's still a trader, and basically what he was doing in his career, he was trading options. And well, I mean, probably he's trading options right now still, because there are no ex traders in the world. And basically, this man talks in his book. He talks about uncertainty, and how you just constantly, every day, you face uncertainty in the markets. And I mean, like, I just sometimes wish everything, like, life was easier. I wish life was easy, and you just like figure out a strategy and then you just work with it. But then in reality, it all changes. Like now, the markets are very volatile due to so many like political issues, and soaring oil prices, soaring gas prices. All these factors are affecting the markets, but it's constantly changing. The markets are evolving, and something that used to work like last month might change. And yeah, I mean, like, I also wish I had like only winning sessions, only winning trading sessions, but sometimes I have losing sessions, and that's, well, pretty much part of the game. And yeah, so the only way to survive in this game of trading, is to really think of it as a serious activity, and to really treat it as, maybe treat it as a business. Yeah, I mean, people who treat trading as a business, I think most of them, they succeed. And in business, you have spans, you have costs, and then it's all about constant improvement. It's about evolving as a trader, as a person. So figuring out something that works, trying to avoid making same mistakes all over again. So things like this. Okay, so I want to go ahead and open another trade here on the GBP. So the euro against the GBP. But I want to open this trade on a pullback. So I don't want to open this trade right now. I want the price to go up a little bit to make a little upwards push, and then that is why, with this intention, I've set a pending order. So I've placed this pending order, and it's waiting for its moment. Right, let's give it a try. Outcut. So AUDCAD. So when did things go wrong? So in the beginning, I had two losing trades, two winning trades, and yeah, okay, so that was it. That was this losing sequence, and now it's a win-loss. All right. So far it's going 50-50. Yeah, and well, I just want to remind you guys that So usually the longer or the higher the time frame. So let's say if I were looking at the charts like this, like 1 hour time frame, and my trades would last hours, maybe even days and weeks. I mean, like that makes trading on average so much more profitable because you just manage to catch these long runs instead of trying to catch these little impulses, these little pulses, like fluctuations on the market. We are aiming for, like bigger goal. It's like this very clear, very obvious example, right? So if you bought Bitcoin and you sold it, I mean, like let's imagine you bought Bitcoin here at 10,000 and you sold it at, say, the next day with a 30% profit, like in a few days. So that's a 30% profit. That's nice. But then look how much you missed. And how much you left on the table in case you didn't re-enter the position. So one of the main things that I tell people with who I talk about trading and who ask me about how to be successful in trading, how to become a profitable trader. So first thing is to maybe switch to higher time frames. Well, of course, I cannot conduct a webinar, trading on high time frames, because then this webinar is going to last. It's got to be like a constant, non-stop trading for a few days. But generally speaking, the higher the time frame, the higher your chances of actually making trades, making profits. Yeah, it just works like that. What is candle and trade time? So candlestick or candle or Japanese candlestick or a trading time is, well, basically it's this. It's is like every, so this current red candlestick is one separate candlestick. So we have one. So this is the previous one, and duration of this of every of these candlesticks is 1 minute. So basically, within this 1 minute, within the current minute, the price of this asset, it fluctuates. It goes a little up, it goes up, it goes up, and goes down. Just basically, yeah, it marks its. So instead of linear chart, because we can look at this price as an area chart, and so area chart is very common to us. Most of us can understand, can see, can just have a quick look at this chart and can understand. Yeah, this is linear chart or area chart, and basically, yeah, the price goes up, price goes down. So we have x-axis, like time axis, and we have price axis. So it's fairly simple. Now, what we can do is we can divide this linear chart, this area chart, into sub sections, and we can give them, like, we can like cut them into minutes, or maybe even into 5-minute intervals, and then we have this interval, this Japanese candlesticks chart, which is another way of presenting the same information and the same trading that is there, that is on the platform. So that's pretty much it. So these are Japanese candlestick. I think there definitely is a maybe one or maybe even two webinars. I don't know how many. So this topic is quite popular, and you can search on our YouTube channel in the recordings, and you can find it. And well, if you just need like a detailed explanation about Japanese candlesticks. And well, trade time is this, so duration of trades. And I usually follow this simple rule that you just basically take the Japanese candlesticks time and you multiply it by 3. And that's how you get the duration of trades. So 1 times 3 equals to 3 minutes, and that's your trade time. All right, let's try Asia Composite Index. So we are trading currently under the 20 SMA. So the 20 SMA is right above the price. Next, we have the 7 ROC, the rate of change with a period of 7, which is under the zero line. And last but not least, we have the 14 rate of change, which is also under the middle line. And that's the final confirmation in this strategy, in this signal. And so we get first layer of confirmation, the second layer, and the third layer of confirmation. And so that's a signal. So gold. So we have this. The previous candlestick closed just under, and I think we can now open a trade. Yeah, let's open a trade in the downwards direction. So I looked at the 7 ROC and the 14 ROC. They were both pointing down. So that's why I opened a trade down. What happened with outcut? All right, so I think I was kind of close to making profit on it, but just didn't close with a profit. All right, so what I want to do here is I want to probably place another trade here, except I want, okay, so now, right now, the situation here on this chart is not really clear because we are trading slightly above and then slightly under this 20 SMA. So not really, the price has not found its course. Okay, so in this case, what you want to do is, well, probably you want to wait until the situation is cleared. So yeah, I would say it's a total sideways movement, not really going anywhere. All right, so what can we find next? All right, so let's see how this trade closes. All right, so this current candlestick just closed above the 20 SMA. So let's wait. Let's wait for the second candlestick. I just want to make sure that it also closes above the 20 SMA. So then we can really figure out the kind of like the global trend. And whether it's this current breakout is the true breakout or not. So right, so gold is looking nice. We have 35 seconds to go on this trade. Okay. And yeah. So let's. So I'm really looking at this, the Euro GBP, and I'm thinking whether it's going to hold or not, or it's going to give in to the pressure from the sellers, and the price will basically close under. Okay, so now the situation is very similar to this. Okay, so now outcut is more clear. Okay, so now we are really aiming for a down trade here. So I'm thinking of opening a trade down. So all right. outcut. Okay, I'm gonna give it a try. I wanna also place an order, place a trade of 5 minutes. And yeah, so I will now open a few more trades to see. Are there any promo codes or bonuses today? Well, nope, I don't really have anything, but you can always click on your, like say, expert traders way, and in that traders way, you always have some promo codes definitely available, and so another trade here on Europe Composite Index in the downwards direction, and so not these. So right, so almost here. The signal is almost there. Just waiting for this, for the 14 ROC. Right, so Apple closed, opened with another gap down. Oh wow, what is happening on the financial markets? And Brent is storming now. This wow, so Brent futures have stormed above the 115. Wow, so this is not futures, this is spot prices. So the spot prices are already trading at 112.5. Wow, and well, natural gas. So natural gas prices well above $9. Wow. Just well, it's a it's a day of reversals, guys. I just have to accept it. It's just sometimes things yeah, it just happens as it happens. So 2.5 minutes, 2.5 minutes. AUD CAD. Yeah, I think I wanna just gonna go ahead and close this trade and save a little bit of money, because then the price is just pushing north. It's just pointless to keep it. And two more trades here, two final trades here. So after this one closes. So well, yeah, I have to accept the truth. It's not really the most successful trading session, so to say. But like I said, you never know before you start trading, and I would still confirm that this strategy is definitely one of my favorite trading strategies, and it's a real good strategy. So sometimes it works a little better, sometimes it works a little worse. But generally speaking, yeah, there are the so-called phases of the market, and sometimes you just on the kind of like trading side, and then next hour it's a like some time for reversals. So you just never know. Well, anyways, guys, I would like to thank you all for your attention. I tried to do my best. I did my best. I tried to show you as many signals, as many as I could. So in total, we had 22 orders, 22 trades. So thank you very much for watching my webinar. And yeah, good luck in trading, and I will see you next time. Thomas signing out. Thank you.